So you've received an offer to purchase your home. Very exciting. Before you just sign yes, you need to consider a few additional things than just that money amount they offered to purchase your home, called the price tag. Looking a little deeper at the offer is very important. There are several components. We're going to talk about one of those components today, which is the financial strength analysis of the offer. We'll review, do they have a pre-approval letter and what does it look like? The down payment amount they're offering, what financing type are they going with for their loan, what earnest money are they putting up, and an appraisal gap coverage. At the end, we'll talk about 5 key considerations for your response. Are you protected in the contract? What are your true net proceeds once you hand over the keys? What is the closing timeline? How qualified is that buyer? And are you assuming more risks than you should? The first is the pre-approval letter. A lot of home buyers will be coming to you to purchase your home with a mortgage. So with a mortgage, they'll have a pre-approval letter from the mortgage company showing that they are indeed approved to purchase a home, what amount, and any type, what type of loan, any kind of details. If they bring forward a letter that is older than 30 days, then that'll need to be verified. If they didn't bring a letter at all, then you'll need to ask them for a letter. You need to show that they are an actual buyer and that they can buy the home. If they're a cash buyer, that's great. That changes things a little bit. We'll talk about. But with a cash buyer, you do still need proof of funds. You need them to show to you that they do have the monies to purchase your home. The other component is the loan considerations. So in the event that they're a cash buyer, then there is no loan. So that would eliminate this type of qualifier. But they still need to show you proof of funds. With a loan, you want to look at how much money are they putting down on the loan. 20% is kind of your traditional. And if they are doing less than 20%, that then brings up why. Is it the type of loan that they're getting that they don't need to? If they're putting down more, a lot of buyers, they've sold a prior home, they have equity, and they want to put that equity into their next home. So that's completely understandable. If they're putting down more than 20%, that is favorable to you because it does show that they have the funds to purchase the home and that their loan would get approved. Lenders are definitely going to approve a loan when they have additional equity in the home, which is put up as collateral for the loan. Then they have less risk as a lender. So the higher percentage, the stronger the buyer. And then the loan type is important. There are several types of loans. I listed some of them here. When you look at the type of loan that they're planning to use to purchase your home, that will then bring in different conditions that are required, either the property to be in a certain condition or even restrictions on fees that they can pay at the closing table. So the loan type is an important consideration for you to review. The next thing is earnest money. Earnest money is given within a time period after the acceptance of the offer, which is the offer is put forward to you as a contract. And once you sign that contract, then they have a certain amount of days to put up the earnest money, which is typically 3 days, sometimes 5 days. They give this to the closing agency, and that is held at that place. It is always the buyer's money. So this is not money that you are given that comes directly to you that you put in your bank account. This is always the buyer's money, and that will then be used by the buyer at closing. The buyer can put it towards that 20% down payment on their loan. They can put it towards the closing costs, things of that nature. So it is always the buyer's money. Why does it matter to you then? It is money at risk in the sense that if the buyer does not hold up to their side of the contract, then those monies could end up coming to you for them defaulting on the contract. So it is an amount of money that is put forward as good faith for purchasing your home and is important for you to take a look at to make sure that they are truly planning to fulfill that contract and purchase your home. 1 to 3% is what you're looking for. And again, if it's less than that, that's just maybe something you would need to push back on and request, or kind of better understand why they wouldn't put forward a good earnest money deposit on the purchase. An appraisal gap is something that a lot of sellers don't think about, but it is important because if your home is being purchased with a loan, then an appraisal will take place. The lender will require the home to be appraised. Some cash buyers also do appraisals just to show that they are paying the right value for the home. Appraisals are similar to CMAs, the comparative market analysis that we've talked about. They are done by a licensed appraiser, and it's a third party, not any type of skin in the game for the lender, for the buyer, the seller. They're definitely a neutral party in the transaction that's brought in to evaluate your home for the lender. And they look at things like, where's the home located, what is the price what is the price for the purchase of the home, what size is the home, bedrooms, bathrooms. They do look at that compared to other homes that have sold and are currently on the market. But they also look at market conditions, and this would be them trying to look into the future and see, how is the market in general doing, how's the economy doing, how is the area, is it growing, is it receding. So they do have a heavy component in those market conditions, where they're looking at it a little like an art more than a science. So you can have an appraisal come in lower than what your home is being sold for, what your buyer agreed to pay for your home. And that does happen, and is something that you should plan for. So in the event that is not currently in the offer coming forward to you, I would definitely build that in and make sure that you have some sort of agreement up front that if the appraisal comes in X amount low, then the buyer has agreed to pay that difference, or you have agreed to split that difference up to a certain amount. It's good to put those discussions in your contract. The 5 considerations, in summary, that you're going to want to think about when you're responding to an offer to purchase your home are you protected in the contract? So there's different stages, such as when an inspection occurs, when the appraisal occurs, that you want to make sure there's language in the contract that protects you as a seller. Also, what are you going to walk away with? So at the closing table, you've sold the home, handed over the keys. What are all the fees and all the costs built in that really what you're going to be walking away with? Is the closing timeline something that's doable? Is it too short, too long? That type of thing. That's an important thing to look at and to consider when you receive an offer. And that buyer qualification, which is really what we covered. Are they a strong buyer? Do they bring forward a strong offer that is fair to you, but also what's the likelihood of them actually being able to purchase this home? And contingencies are you assuming all the risk in this sale? It needs to be a fair purchase where they're assuming some of that risk also in the transaction. This is a worksheet I put together that you would be given if you picked one of the listing packages that you would have. Also, I am available to support you. You could pick an a la carte service, and we could get on the phone and do a one-on-one to talk about your offer. These tools are available to you when you work with me, and I look forward to working with you. Thanks for your time today.